1 second. Yeah. So guys, IFOS, as I told you, 5 marks it will come. Income from other sources means what? It is the nature of income. Income should not be exempt, and such income should not be chargeable under any other head of income. We have seen that. So first part of IFOS is what? Dividends. Earlier, dividends was chargeable to tax for the corporates, for the companies, under called corporate dividend tax, dividend distribution tax. Now, since Finance Act 20, they changed it whereby for companies it's allowed basically, and for shareholders it's abolished. The entire concept is abolished, where they don't have to pay any tax. But who has to pay tax? The shareholders. So that is dividend 56 to 1. Winnings from lottery, crossword puzzle, races, games 56 to 1B. We will explain everything later. Issue of shares at premium exceeding the fair market value. We will see that 56 to 7B. Forfeiture of advance received 56 to 9. Interest on compensation or enhanced compensation received during the year 56 to 7 to 8. Sorry. Sum of money or property received 56 to 10. Now the most important thing in the exam, what they generally ask is this: gift taxation 56 to 10. Regularly everything they can ask, but this is a little more important. Family pension and all other things, no problem. And any other income under Income Tax Act, but not falling under any other specific heads of income. One MLA fellow is there, he will come and do all false promises. He is getting salary. Now, is he an employee of the government? No. That salary will be taxable to him under IFOS. So, for board meetings, the directors will be getting salary separately. But for board meetings, he will get something called a sitting fee. As the name suggests, he has to pay for sitting and discussing. That sitting fee is not in the nature of employment. So, that is in the nature, this is a professional director. He is not employed in the company. So, for that director sitting fee will also be coming under IFOS. Please note all these things in the exam if they ask you. Interest on income tax refund. Refund I got. On that interest also I got. That interest portion will be what? Income tax. Refund will be IFOS. Rent from vacant land. I told you vacant land is not house property. Vacant land will come under IFOS. Subleasing also. You gave to me, I gave to somebody. Subleasing. That subleasing also will be under IFOS. Agricultural income from a land situated outside India. Why? Because that is agricultural land in India exempt from tax. Outside India, not house property, nothing. What is it then? IFOS. Part-time tutorship. So I am a full-time CA, let's say, and I am working in some company. Part-time I do some teaching. Assume. So what is that? IFOS. Interest on bank deposits. All the bank deposits that you have, interest that you earn also will be there. Insurance commission, everything will be under IFOS. Nirmala aunty will tax anything and everything that you earn. That money comes in your wallet and which is not exempt. Who will tax? Nirmala aunty will tax. Yes. Income chargeable under other sources only if it is chargeable under the head profits and gains of business or profession. Interest on securities. Correct? Sum collected from employees towards certain employee welfare schemes. Letting out of machine, we'll see all this guys. Composite income, composite, we already discussed in IFOS. Composite income from letting out of machinery, plant, furniture together with building. Section 56 to 3. Okay. Section numbers are not important at all. Do not worry about section numbers. Just the concept you write. Very, very simple. On the other hand, guys, one more will come. Any compensation or other payment received by any person in connection with termination or his employment or modification of terms. You are a director, they will ask, you are a director or you are an employee of the company, working in the company, you have been appointed for 5 years. At the 4th year only, they will say you get out. I will say, boss, I will get out, but you should give me compensation. So 1 year compensation they will pay. Is it in the nature of salary? No. What is it then? IFOS 56 to 11. You know ICICI head Chanda Kochar. Have you heard? Practical example I am giving. Chanda Kochar. Chanda Kochar was thrown out of ICICI. Yes, it's called severance package. She was thrown out of ICICI because of the Videocon scam. She colluded with this Venugopal Dooth of Videocon. So, and her husband also, Deepak Kochar. So, yes, now she was thrown out from ICICI and she was given a severance package. Sever means to cut. Since I cut you off from the company, take madam, severance. That will be charged for her under salary or IFOS? IFOS. Got it? Keyman Insurance Policy. Of course, Chanda Kochar was the managing director. If something happens to her, obviously the company will go down. That's why the company will take a policy called Keyman Insurance Policy. The Keyman Insurance Policy, if the money comes back to me, like for example, now Chanda Kochar committed fraud, so the company will get some money. Is that taxable under IFRS? Yes. Maturity proceeds received by employer, that is the company. Profits and gains of business it is charged under. Important to know. ICICI Bank getting the maturity proceeds, PGBP. Chanda Kochar is getting money, salary, because it's linked to salary. Chanda Kochar, let's say some employee died. They gave it to the family member. For family member, it's IFOS, important. I repeat, for ICICI, PGBP. For Chanda Kochar, salary. They didn't give to Chanda Kochar, let's say, some other employee committed fraud, he died. Okay? They gave it to the relative, income from other sources. For example, Coffee Day head, Cafe Coffee Day head, VG Siddhartha, committed suicide. They had a Keyman Insurance Policy which went to his wife. So now, for the with the wife's name, wife's income tax return you are filing, where will you put it? Salary, PGBP, IFRS, answer. Come on guys, answer. Where will you post it? IFRS. Very good. IFRS. That's all. That's all. So the SSE follows accrual system of accounting. Due basis shall be adopted for charging income. If it is payment basis, then payment basis. Yes. Now guys, come on. Taxation of gift. Very, very important. VVIMP. You'll write, no? Very, very important. Pakka questions will come from these areas, right? Come on. 56.210A. Nature of receipt, sum of money. Particulars without consideration. What is this? What people used to do, simply they used to give cash. All this politician bribe, simply cash, take money. Now they said, if you charge more than, aggregate amount more than 50,000 if you get, fully taxable. I'll give you practical examples. I'm just doing theory, practical examples I have in my material, I'll give you. Examination questions I have converted to questions for your revision. Okay? Yes. See, for 100 pages and all is there in institute material. I have condensed it for revision so that fully you will be clear and you can write the exam properly. Right? In fact, last week only I had to take. I was not well. I had fever and all that. Otherwise, last week, that last exam, whatever you had, I would have taken. Yes. 56.210 BA. Immovable property. Money you charged. What did I do? I gave my house only to you. If I gifted my house to you, if the stamp duty value of the immovable property is more than 50,000, obviously it will be. Then how much, guys? Full amount is taxable. Full. I am fine now, guys. Thank you so much. Yes. Next. Third one. Immovable property. Inadequate consideration. Means what? I sold my house, which had a stamp duty value of 1 crore. I gave it to you at 50 lakh. That's all. Imagine. 1 crore house, I gave it to you at 50 lakh. Now the beauty is, my dear friends, the balance 50 lakh will be chargeable. Balance 50 lakh will be chargeable. So, basically, there was something called as the stamp duty value, something called as their selling price. There was a house. You sold the house. Let's say the stamp duty value was, you sold the house at 100 lakhs. Stamp duty value was 105 lakhs. General rule. It is the stamp duty value or selling price, whichever is higher. General rule. Whichever is higher. So, even though you sold at 100 lakhs, how much will I charge? 105. All the people went to Nirmala auntie and they said, auntie, little bit buffer you give, auntie. What is this? Some tolerance limit, please. This was during Arun Jaitley's time. Arun Jaitley was the finance minister. Arun Anna, please. Some buffer, please. So they said, okay. What is the tolerable limit? 10%. Tolerable limit, 10%. So they said from your selling price, if plus 10% you add, or basically 110% of selling price. If the SDV is less than that amount, no problem. You can take the selling price only. So if the SPV, what is the selling price? What is the tolerable limit? 10 lakhs extra, 110. If the SPV, the standard, your stamp duty value, SDV is less than 110 lakhs, less than or equal to 110 lakhs, no problem. So what amount you will take? This amount. Now the question is, your fair market value or what you are supposed to sell was 100 lakhs. Stamp duty value was 120 lakhs. And you are coolly selling it at 50 lakhs. Deadly. What is the difference? 50 lakh. What is the tolerable limit? Let me make it, stamp duty, let me make it 105 only, guys. For easy sake, to make it easy, don't worry. What is the tolerable limit? 5 lakhs. Tolerable 5 lakh. Up to it can go up to 10 lakhs. Is it within the tolerable limit? Yes. Now, Nirmala auntie said, cheating. You sell it at 100, I will agree. SDV is 105, you sell it at 101, no problem. 102, no problem. But you are selling it at 50 lakhs, bro. Not allowed. So, that is why this formula, you see, difference between stamp duty value and consideration, if the difference exceeds higher of what? 50,000 and 10% of consideration. Difference. What is 10% of consideration? 10 lakhs. What is 50,000? 50,000. 50,000 or 10 lakh? 10 lakh. What is the difference here? 50 lakh. Deadly. Up to 10% I'll tolerate. If your selling price at 100 and my SDV is 110, no problem. Sell it at 101, no problem. 102, no problem. 103, no problem. I'll agree. But you are cheating now. You are selling at 50 lakh, 60 lakh, etc. Not allowed. So that is this logic. Logic, don't mug up anything. Everything has logic. The difference between stamp duty value of each immobile property and consideration paid exceeds what? 50,000 and 10% of consideration. 20% in certain cases. 20% in certain cases, we'll see that later. Then, movable property, car I gifted, or let's say jewelry I gifted, not car, jewelry I gifted without consideration. The aggregate market value is more than 50,000, full taxable. This is not like a basic exemption limit. See, this 50,000 is not a basic exemption limit. And it's for each of the 5 categories. I'll show you an example. Movable property, inadequate consideration. Jewelry worth 10 lakh. I sold it at 3 lakh. Difference is more than 50,000 aggregate. So what should be taxed? Full. Difference will be taxed. So with problems. Now we'll do practical problems. You'll understand. Check. When you see it in practice, you'll understand. Don't worry. See, first of all, if aggregate, all of you ready? Yes or no? Yes. Come here. Everything you'll understand with these examples. If aggregate money received is more than 50,000, then it is fully taxable. Example, money was received from the following. Abel, Bhargav, Chandrika, Danish, total 50,000, not taxable. Why? It's not exceeding 50,000. On the other hand, money was received from the following. Abel 15, Bhargav 25, Chandra 40, Danish 50, overall 75. Received in excess of 50, it is not a basic exemption limit, fully taxable. Full 75,000 taxable. Next. Movable property without consideration, all exam questions, practically I am showing you. Movable property without consideration, movable property with inadequate consideration. If aggregate FMV of property exceeds 50,000, then it is fully taxable. For example, sculptures I sold for 40, shares 15, jewelry 25, total is what? 80,000. Aggregate, I should not see each, aggregate. Received in aggregate 50,000. What do you think? So it is fully taxable. Why? Difference is more than 50,000. Mind you, they are towing aggregate. You should add all the FMVs, not individual assets. Inadequate jewelry receipt for 20,000, but FME was 80,000. So FME minus consideration, 80 minus 20, 60,000. Is it exceeding 50? Yes. So full 60,000 taxable. What do you mean by movable property? Come back. Whatever is there in capital gains. Shares, securities, jewelry, drawing, sculptures, archaeological collection, painting, any other work of art, billion. So if I draw on Mickey Mouse, nicely I will draw on Mickey Mouse. Picasso's grandfather, grandson, PJ, on fat Mickey Mouse. I will frame it. Is it a work of art? Yes. I will say 1 crore. Yes. Correct. Motor vehicles are not in this. Why? That also logic is there. Guys, if I buy a BMW worth 1 crore today and gift it to you, you will use it for 10 days and sell it. Will it fetch you 1 crore? No. So what are covered here are assets which are appreciating in value. Assets which, are you understanding the logic why motor cars are not covered? If I gift a motor car to you, today 1 crore wala, 2 months you use it. Tomorrow can you sell it at 1.5 crore? No. That's why Nirmala auntie says, no problem bro, you can never sell it at higher rates, so no tension. But shares will increase, jewelry will increase, drawings will increase, value will increase. Yes or no? Are you getting the logic? Why motor cars are not there? Yes or no? Everything has logic, no mugging up. Yes. Next, immobile property. So motor cars are personal effects. So it's not covered. In capital gain also they are personal effects. They are not coming under this mobile property. Only if they are using as business, then they are not personal effects. But here it is anyway not covered. Next, immobile property. Excuse me. Immobile property without consideration. If aggregate stamp duty value for property exceeds 50,000, then it is fully taxable. Plot received is 40,000. Building received is 47,000. Aggregate, if you see, aggregate per property exceeds 50,000. Is it exceeding 50,000? No. Is it exceeding 50,000? No. Because SDV per property must exceed 50,000. Very simple. Immobile property means what? Anything that you know, it also includes land or building or both. Just land also. Plot of land also, if you sell, it will come in IFOS, I know, and that's why it's coming here. Or building, normal building, or both, land and building or land appurtenant there too. Now, inadequate consideration. Two conditions must be satisfied. It should exceed 50,000 and what? SDV should be more than 110% of consideration. And difference is fully taxable. Building was purchased for 4 lakh. SDV was 4,60,000. What is the difference between SDV, this thing, SDV and what you are purchasing it for? 60,000. 4,60,000 minus 4 lakh. What is 110% of, what do you say, 4,40,000? So obviously it is more, I mean, it is, both the conditions are satisfying. It is exceeding both. So what happens? 60,000 is taxable. 60,000 is taxable. Very, very simple. Right? So coming back. Did you understand this? Yes or no? Full, in depth. Yes or no, guys? Come on. All of you, come on. Until we finish, we will not leave today. Just sit and no need to study only after the class, I can assure you. Exemptions from taxability. Gift received from any person shall be taxable. One is what? From any relative. What is relative? You see, relative means individual and their parents. Parents, brother, sister and their spouses means auntie, uncle. Sheila, auntie, Sheila, uncle. Aunties, uncles. Brother, sister and their spouses. Ramesh, uncle. All your stupid relatives. What are you doing? CA. Which year? Which college? Those stupid fellows. Okay. All of them are covered. Then individual. Individual who are brother and sister. Correct? Younger brother, elder brother, cousin, and their spouses, sister-in-law, brother-in-law, everybody. Then for you, lineal ascendant, descendant, tata, party, party's mother, everyone. Down, your son, your daughter, their children, their children. Sir, we are still doing CA, sir. By the time we clear CA, all that would have happened. Yes or no? Yes. So, lineal ascendant, descendant. Correct? And of course, step is also covered if it is legally adopted. All that is covered anyway. Next, spouse, wife. In Companies Act, taking spouse only is a big thing. That is because the compliance is more. In Income Tax Act, Nirmala aunty wants tax from everybody, generally. So she's covered everyone. But here, one benefit also she's given, relative will, everyone is covered. So if you give a gift to your relative, see your spouse, your wife, wife's brother, sister and their spouses, your sister-in-law, brother-in-law, all those are relatives. Plus your spouses every side, spouses, parents, party's party, and from below, everybody covered. Right? So spouses, everybody covered, you, everybody covered. Got it? Tell me one thing, your uncle is a relative or not? Your uncle is a relative or not? Yes. For your uncle, are you a relative? For your uncle, are you a relative? No, because you are a nephew or a niece. You are the brother's children. Where is brother's children covered? See here. Brother, sister and their spouse covered. Where is brother's, sister's children covered? So your nephew and niece not relative. Remember all this in the exam. They'll say, Miss, your nephew wants to, you want to give your gift and house to your nephew. Exempt, not exempt. Exempt, not exempt. Not exempt. Then relative of HUF. For HUF, member of the HUF is relative. But for member of HUF, is HUF relative? Reverse. What do you think? Answer. For a member of a Hindu-underworld family, if he gifts something to his HUF, is it covered or not? What do you think, guys? Exempt or not exempt? Guys, for a HUF member, any member of HUF will be relative of HUF. Most important, for a member of HUF, HUF is not a relative. Reverse relationship. My uncle is my relative. For my uncle, I am not relative. Similarly, for a HUF, member is a relative. For a member, HUF is not relative. Understanding all that they can ask in the exam. A member of a HUF gifted a house property to the HUF. What do you think? Exempt or not exempt? Understanding? Yes. Exempt or not exempt? Not exempt. All these exam questions asked in the exam, 2 marks, MCQ, to trick you. They'll ask to trick you all these things. Be careful. Next, anything on the occasion of marriage of the individual. Sir, 5 times I'll marry. Hey, only once. Okay. Or if that person dies and all because of you, again you can marry. Just kidding. Okay. On the occasion of marriage of the individual. Exempt. Anybody can give gift, any gift you can give, no tension. Under a will or by way of inheritance. So my great grandfather has gifted some 1 crore worth of shares to me and he died. So what do you think? Engagement and all not included, only marriage. Engagement, pre-wedding shoots where they'll run and come, all that movies you would have seen, no? In that stupid pre-wedding shoots, Sangeet, all that nonsense is not only occasion of marriage. Under a will or what? Inheritance. Under a will or inheritance, yes. So my great grandfather died. He gave me the shares, 1 crore worth. Yes, exempt. In contemplation of death of the payer, my great grandfather is dying. I am looking after him. My great grandfather will tell, bro, Tambi, Maple, You have looked after me really well. When I die, I will give you 1 crore worth of shares. I'll be like, hey, and put one pillow on him. Hey, all that don't think. Okay? Yes. So if you see what? In contemplation, I know I'm going to die. So when I die, you will get this amount. Yes, undue influence. Very good. Right? From any fund, foundation, university, other educational institution, hospital, medical institution, in 1023C, all these hospitals, colleges, etc., like Tata Memorial Cancer Research Center, all these things, any amount that they receive from any fund or buy, if they receive or they pay, everything, whatever the case may be, exempt. Similarly, charitable institutions. The taxation of these two in CA final, so don't have to worry about it. Then holding company giving to a wholly owned subsidiary anything, or wholly owned subsidiary giving to holding company, provided the holding company should be an Indian company, subsidiary company should be an Indian company, that thing. Then amalgamation. These are all final things. CA final, it will come more. Okay. Demerger, business reorganization, all those things. Very, very simple. During COVID is a COVID amendment. Any individual has received money from any person in respect of expenditure incurred by medical treatment in respect of COVID, exempt. To the extent of from his employer also, if you receive, or from any other person, maximum 10 lakh. Correct? From employer, any amount. From any other person, 10 lakh. This is COVID amendment because, you take donations from many people during COVID, that is exempt, no problem. So movable property, debt, immovable property, fair market value will be the normal registration valuation value. There is no basic exemption limit, I already told you. Stamp duty value is adopted by the stamp duty authority. When should I see, that also they'll ask you. Stamp duty value as on the date of the agreement is 1 crore. Date of registration is 1.2 crore. What should you take? What should you take? Date of agreement, when you sign, agreement for sale, you will make 1 crore. Registration will happen 5 months later, 1.2 crore. What should you take? Yes, guys, it should always, you should take on the stamp duty value accessible on the date of the agreement shall be adopted. Agreement value. Stamp duty value as on the date of the agreement shall be allowed only when the amount of consideration is partly paid by check. So if I make an agreement for 1 crore and pay 10 lakh rupees immediately through check, then no tension. You can claim 1 crore, date of the agreement. Because on the date of the registration, if it has gone to 1.2 crore, you said, sir, no, sir, that day only you please take 1 crore. You can take 1 crore. Prescribed mode. They'll ask in the exam. This is an exam question they can ask you. Stamp duty value on agreement date is 1 crore. 10 lakh rupees is paid by cross check. Check. Exam question. The SDV on the date of registration is 1.2 crore. The SDV for the purpose of IFOS is 1 crore or 1.2 crore? Answer. Answer. 1 or 1.2? If you tell 1 crore, 100% wrong. 10 lakh is paid by cross check. Cross check. Cross check. Cross check is not there only. Account pay check, account pay bank draft, electronic clearing. Where is it? A cross check is a check where, what do you say? Bearer check, cross check and all not allowed. Got it? Please be careful. 1.2 CR. So, 9th also is important. It will be used in capital gains also. If the SSC claims, stamp duty value is, 1 crore. Fair market value is, 1.2 crore. Or sometimes fair market value will be 80 lakhs also, whatever it is. If the SSC claims that the stamp duty value exceeds the fair market value of the property, he is telling, sir, my house is next to a crematorium, sir. The market value itself is 80 lakhs. You are telling stamp duty value is 1 crore. Sir, please do a valuation. So, assessing officer may refer the valuation of asset to a valuation officer. So, basically it goes to the valuation officer. Correct? Ghost will buy. Correct. So, you see, if the value ascertained by the valuation officer is more than the stamp duty value, then stamp duty value will be the FPOC. We'll see the example, you'll understand. See, 100 is there. Consideration I have actually paid 100. SDV is 90. I have not made any valuation. What is the value to be adopted for section 56 to 10? 100. 100 is there, 150. No valuation made, 150 only. Now you see third one important. 100 is the consideration. SDV is 150. Valuation officer has determined 170. Like, bro, I am paying 100. You are telling SDV is 150. It's one bloody in crematorium. Correct? 7G Rainbow Colony. Not Rainbow Colony. That other colony is there, no? Demontes Colony. Demontes Colony it is. Sir, you are telling 170. Are you mad? Correct? So, what should I take there? SDV. Why SDV? Because exceeds 110% of the actual consideration. Correct? Next, 100, 150. Valuation officer comes to 120. Thank you, sir. Simply 150 and all they put, sir. Actually 120. Okay, sir. I have taken 100. Okay, I'll pay 120. Then it is 120. 100 I have already paid. 150 is the SDV. Valuation officer is my best friend. He'll make it 90. After 190 I give him, he'll make it 90. I have already paid 100. What I will take 90? It should be taken as 100 only. 100, 102 SDV. No valuation only is made. It is less within the threshold limit of 110. No tension. 100. 100, 105. But the valuation officer makes it 120. I'll say, bro, you are simply making whatever you feel like. Isn't it within the limit only? Please allow me, bro. Okay, allowed. Very simple. Very, very logical. Okay? Yes. Any gift received by an employee, cash gift fully taxable. Gift received in kind, if it is more than 5,000, I will give one gift. I will get a gift as an employee this much. One watch, I will give 15,000 rupees. He will give me 15,000 rupees. How much is taxable as per Quizit? 15,000 minus 5,000. 10,000 is fully, if you see, fully exempt. Exceeding 5,000 is what? Fully taxable. Got it? Any gift received due to business or profession, under that profit or gains of business. I will give this as what? Gift. To whom? To my doctor. Doctor saved my life. I give him as a gift. Doctor, please take. This is during the course of business he earned. So what will it come? It will come under what? PGBP. Understood? There is any question they come in the exam this Sunday. That's all. Every question I am discussing, whatever possible. Okay. Next, 56 to 10 is not applicable when the gift received is stock in trade. Obviously. For example, jeweler purchases diamond ring. This also they can ask in the exam. A jeweler purchases diamond ring at a consideration of 1 lakh, while the FM is 1,60,000. What will charge gift for him? Said, no, bro, I have using the economic features in the market. I have got it at lesser rate. I'm holding it as stock in trade. In case the jeweler shall not be taxable as he received the diamond rings as in the course of business as stock in trade. For jeweler, 56 to 2 will not apply, 210 will not apply. See this example, guys. Very, very good example. Can be asked in the exam. This is capital gain plus IFOS. Mix. Check it out. Capital gain is also there. IFO is also there. They want to mix and ask the question to confuse you. Look at this. Concentrate. Interesting. Miss Sita sells her house property. Cost of acquisition is 4 lakh. Acquired in the previous year 1 and 1-2. Sells which day? 14/11/2021. To Mr. Kunal. Selling price is 40 lakhs. SDV is 45 lakhs. Kunal will in turn sell it to Mr. Adi on 12/3/22. Selling price is 84 lakhs. Now coolly think. Here, Miss Sita will sell to Kunal. What is the capital gains in the hands of Sita? What is the capital gains in hands of long term, because acquired in 1-2. Long term capital gain. Full value of consideration, what should I take, guys? Always I should take, as you know, 110% of STV. Selling prices of SP, sorry. Selling prices 40. 110%, 44. Is the SDV well within the limit? No, SDV is 45 lakhs. I should take 45 lakhs. That is the same thing. Then minus index cost of acquisition. 4 lakh is the amount that I acquired for from the year 2001-2. So 317 by 100, 12 lakh 68. LTCG is 32 lakh 32,000. That is fair enough. But Mr. Kunal has bought the property valued at 45 lakhs at 40 lakh. Is it more than 50,000 difference? Yes. Is the difference more than 110%? 110% of 40 lakhs is 44 lakhs. Is 45 lakhs more than 44 lakhs? Yes. So IFOS will come. So full value of, okay, gift taxation in the hands of Kunal. As per 56-10, SDV minus consideration 5 lakh. 5 lakh is greater than 50,000 also, and 5 lakh is greater than 110% of the SP. What is 110% of the SP? 44 lakh. And the difference obviously is 1 lakh. So is 5 lakh more than 1 lakh? Yes. Fully taxable under IFOS. Since Adi has already paid on the higher amount, tell me, when Kunal has already paid on the higher amount, can Kunal take the benefit of 45 lakhs when he is selling the house? Yes or no? Can he take the benefit of 45 lakhs? Come on, guys. Yes. So gift tax in the hand of Kunal. Capital gain in the hand of Kunal. Full value of consideration 84 lakh. Cost of acquisition as per 49.4 is 45 lakh because I have already paid the tax on the differential. Already paid tax on the differential. The short term capital gain is 39 lakhs. Because it's held for, just hardly few months. 2 years, 1 year or something. And on house property it is 36 months. Now, slightly change. If Sita gifts the house property to Kunal, correct? Then gift is not a transfer under section 47. Not capital gain for Miss Sita. As per section 49.4, if any asset is received as a gift or inadequate consideration and SSC has paid taxes, SDV will apply. So gift taxation for him is what? Capital gains will not come. But what of gift taxation? Hands of Kunal. Gift taxation. Fully taxable 45 lakhs. Since Kunal has fully paid 45 lakhs, what will be the cost of acquisition for Kunal when he is selling full 45 lakhs? 84 lakhs minus 45 lakhs, STCG 39 lakhs. Now they can ask you one more twist. Sita and Kunal are relatives. If Sita and Kunal are relatives, my dear friends, for Sita capital gain will not come. For Kunal, IFOS will not come because relative. If Miss Sita and Mr. Kunal were relatives under 56-10, it's not applicable. In that case, cost of acquisition to previous owner will be considered. Period of holding of previous owner will be what? Capital gains in the hands of Sita will not be coming. Capital gains in the hands of Kunal will be what? Full value of consideration 84 lakhs. Cost of previous owner will come to him. Previous owner will come to him. What is the cost of previous owner? 4 lakh. What will be the period of holding? Period of holding from the previous owner will come to him. 0, 1, 2, 12, 3, 22. Full into 317, 12.87 lakhs. Long term capital gain is 71.32. These two examples will cover capital gains plus IFOS, including gift taxation, including relatives. Yes or no? Understood? Understood, my dear friends? Come on, come on. all high five. You can put it on the screen only. On the screen only you give me high five. But whenever you are seeing, no need to put chat. Yes, face bump. Easy. 5-10 minutes will stop. Then tomorrow we'll continue. Now that 53C, I mean this thing, what do you say? 110%. No, this date you have to remember. Date you have to remember. From 12/11/2020 to 36/2021, because of COVID, to boost the real estate sector, 110% was made to 120% by Nirmala Aunty. Threshold. To boost the real estate sector, because houses worth 100 crores, 100 lakhs, that is 1 crore, were being sold at 80, 70 and all those things. So Nirmala Aunty said, okay, let me not make 110%, let me make it, give me 20%. So this date, what is the date? If it is sold during this time, enhanced limit, remember the date. This is a COVID amendment. On or after 1/7/21, back to 110%. So in your examination, please see what is the date when they are selling. If they are selling between 12/11/2020 to 36/2021, should be taken as 120%. All the examples you leave, no problem. Last part, dividend. Dividend generally means a sum paid by the company to its shareholders. Earlier it used to be taxed at the hands of the company, now it's taxed at the hands of the shareholders. This 222A, keywords, domestic company, part of the assets to its shareholders, accumulated profits whether capitalized or not. These are the keywords. It will be deemed dividend. What people used to do, instead of giving dividend, they were distributing assets. Because taxation now came to whom? Shareholders. In order to avoid that taxation, what were companies doing? I will not give you dividend, but what I will give? Assets. Instead of dividend worth 1 lakh, I will give you asset worth 1.5 lakh. Take it. Nirmala Aunty said, bro, I am here. I will tax that also. I will not leave you. Right? So if you see, guys, but to the extent of accumulated profits. Accumulated profits means your reserves and surplus. You have your reserves and surplus of 14 lakh, assume. Instead of giving dividend, you are now distributing it as assets. Nirmala Aunty will tax this also. She will tax this also in the hands of the recipient. Fair market value. For example, book value of asset is 8 lakh. Market value of the asset is 16 lakh. Tell me. 16 lakh of assets she is distributing like that. 16 lakh will be chargeable to tax or 14 lakh? Always to the extent of accumulated profits. So 14 lakhs is taxable. Next example. Book value is 8 lakh. FMB is 11 lakh. 11 lakh or 14 lakh, whichever is less, 11 lakh. 8 lakh, 14 lakh. 14 lakh or 14 lakh, whichever is less, 14 lakh. Very simple. And mind you, it includes whether capitalized or not. In the exam, if they ask you a question, reserves and surplus 12 lakh. Share capital 25 lakh includes bonus of 4 lakh. Bonus is nothing but capitalization of reserves. Tell me, accumulated profits, you will take 16 lakh or 12 lakh? Answer. 16 lakh or 12 lakh? 16 lakh? 16 lakh. You will take 16 lakh. Yes. So that is the scene. Next. To its shareholders. Shareholders means equity or preference by way of debentures, debenture stock. I will not give assets. I will give my debentures. I will issue debentures. Not allowed. Instead of dividend, you cannot give all these things. Or to its preference shareholders by way of bonus. Equity shareholders can get bonus shares. Preference shareholders will not get bonus anyway generally. Now I am giving to preference shareholders bonus I am giving. Not allowed. And even if you give, I will charge in the hands of the recipient. Correct? Very simple. Distribution on liquidation. Company is liquidating. Equity shareholders will anyway get because it's their own funds. What about instead of equity shareholders, I'm giving it to preference shareholders? Cheating. You see, this section, cheating, no. That cheating is covered somewhere else. We'll see that later. But to equity shareholders, only if I am distributing, this section will come. Preference shareholders, this section is not applicable, covered in a different section in CA final. You leave it now. Leave it. If any distribution of assets made by a domestic company to the shareholders on its liquidation, shareholders means equity shareholders, which shall be treated as deemed dividend in the hands of the shareholders. Again, to the extent of accumulated profits of the company immediately before liquidation, again whether capitalized or not. Whether capitalized or not, same. What companies used to do? They used to go for internal reconstruction. I don't want to pay dividend. Another scam I used to do. I used to do a scam. How do I do a scam? Reduce the capital, and then distribute that capital as, dividend. Any distribution by a domestic company to its shareholders on account of reduction of share capital to the extent of accumulated profits again will be taxable in their hand. Again to equity shareholders. Right? Last part of the day over. After this we'll stop. Last part of this is the main thing, guys. This is what? Any payment to the extent of accumulated profits by a closely held company, that is unlisted public company or private company, in the nature of what? Loans and advances. To whom? To a shareholder, to any concern which has substantial interest, any other person. I'll explain with a diagram. Carefully check this. Easy. Diagrammatic representation of 222E. Which is the company? Closely held company, Xerxes Private Limited. It is giving loan to Mr. Kilol, who is a shareholder. Shareholder is how much voting power he has? 10% voting power. That's all. Rather than giving dividend, you are giving it as a loan. This loan will be taxable in the hands of the shareholder. Point number 1. Point number 2. Mr. Kilol holds 20% interest in Xavi and Sons. Mr. Kilol, who has 10% shares in Xerxes. Correct? So first case is what? Xerxes is giving a loan to Kilol, and Kilol has 10% shares in Xerxes. Gone. In the hands of Kilol, taxed. Second, Xerxes Limited is, shareholder is Kilol. Kilol has 10% shares of Xerxes. No problem. Kilol has 20% shares in one more company. One more concern. This concern can be AOP, BOI, partnership firm, company, whatever it is. Whatever it may be. And this company X Limited is now, instead of giving to Kilol, because if I give it to Kilol, again it's taxed. Indirectly will give to concern. Is it taxed in the hands of the recipient? Yes, my dear friend, it is taxed in the hands of the recipient. See? Yes. Third one. Kilol will say, if I take also, I will be taxed. If somebody else takes also, they will be taxed. Let the company give it to my wife. Let the company give it to my friend. For whose benefit? My benefit. Let them give it to them. For whose benefit? My benefit. Is that also taxed? Yes. That is also taxed. In the hands of the recipient, clubbing of income also will happen. So basically, Kilol will be taxed in all cases. Right? Gone. That is the beauty of this entire thing. Very, very simple. Got it? Other things are all chilled out. And then again important, on which day should I see accumulated profits? 222 ABD will be on the date of distribution, MCQ question. 222C on the date of liquidation, MCQ question. 222E, the accumulated profit figure should be on the date of advance. On the date of advance. MCQ question they will play around. MCQ question they will play around. In that Kilol example, just to play around. Kilol has 9% shares in the company. Will Kilol be taxed for the loan? No. Second example, Kilol has 99% in the company but 19% in the concern. Will it be taxed? No. If X Limited gives the amount loan to the concern, Kilol has only 19%. Will the concern be taxed? No. Next. Kilol has 9%. That's all. Kilol has in the concern 99%. No. MCQ questions they can ask like this to confuse you. What are the two things you have to remember? You are a shareholder of that company having 10%, and you should also have substantial interest in one more concern. What is substantial interest? 20%. Both conditions must be satisfied. Yes or no? I am just taking out all tricky MCQ questions and putting it in front of you. Your exam will be very easier compared to this. Don't worry. Income from units and all you can see. Lottery also will get 30% guys. Lottery. Other things are easy guys. You can easily, other things you can check out. Nothing much. Nothing much. You can easily figure this out. Last part. Deductions. Can you get any deductions from this? In respect of certain income, specific deductions have been provided. In respect of those incomes where no specific deductions are given, then revenue expenditure can be claimed. For example, I am earning interest from securities. I have employed a person paying him 20,000 rupees per month to help me invest everything. All the investment interest that I am getting, can I claim the deduction of that salary? Yes. Can I get deduction of the salary? Yes. 100% yes. Can I get the deduction of the salary, my dear friends? 100% yes. Undoubtedly, I can get the deduction of the salary, no doubt about it, right? But most important MCQ, last question, sorry. Guys, first of all, thank you so much for sitting extra half an hour. You guys are awesome. I know there are a few like 70 people, but you 70 people are awesome. Others left, it's okay. But you have stuck around. If you actually stick out like this, see, I can finish it in 1.5 hours, but quality will not be there, guys, right? So I asked them, they said, 1.5 hours, you finish everything. I said, huh? I said, no. Capital gains, give me 1.5, 2 hours next day. This day, you give me 1.5, 2 hours. I'll finish properly so that they'll have no doubts. In same thing in regular batch, I will full history, geography of every section you will know. But not now, okay? Now it's only revision. Somebody else has already taught. My job is just to revise, okay? Yes. So you see, last part, over. Important. In case of dividend or interest on securities, this question they can ask you guys. Dividend on interest on securities. They'll ask you a question. Your dividend income is 10 lakhs. You have employed a person with salary 30,000 per month. You are 3,60,000 you are paying him. Can you claim this expenditure? They'll ask. Before Finance Act 2020, this was allowed. This was allowed. After Finance Act 2020, they said no. You see? A deduction on account of interest expense only is allowed, that to maximum of 20% of dividend income. Very, very important point. If I am earning some other things, no problem. This is only for two things. This is why I am saying very important. Dividend income or interest on securities. If I am investing in the stock market, if I have employed a person to look after that everything, Will I get any? Can I claim this expenditure? No. What can you claim? If I have taken a loan to buy the shares, this is income, dividend income from all the shares that I bought. If I have taken a loan to buy the shares, that interest income, that interest expense that I have to pay the loan, no, that interest only can be claimed. To what extent? 20% of dividend income. Let us say the interest that I am paying on loan is 2.5 lakh. Can I claim 2.5 lakh? Yes or no? From this 10 lakhs, can I claim 2.5 lakh? No. Why? How much can I claim? 20% of dividend. What is 20% of dividend? 2 lakhs. Are you understanding, guys? Very, very, very important. Very, very important. Again, I repeat. Dividend or interest on securities. If I am earning dividend, if I am earning interest on securities, what is the only expenditure I am allowed? Nothing else is allowed. Only one expenditure is allowed. If I have taken a loan to buy those shares, I have to pay interest on that loan. How much interest is allowed? 20% of dividend income. Deadly line. No expense other than this is allowed. Are you understanding, guys? This is the full IFOS. For interest income and dividend income, nothing else is allowed. Only one thing is allowed. What? Interest on loan. How much? 20%. Did you get it? Yes or no? Yes. On that note, my dear friends, we finished a thorough revision of IFOS, all the important points. Right? This will take forever in a regular batch. Whatever is possible, slowly we did. I hope it was of use. Come on, fist bump, all of you. Yes. Thank you so much. See you tomorrow. See you tomorrow. Tomorrow we will be doing what? What will we be doing tomorrow, my dear friends? What will we be doing tomorrow? Capital gains. Very, very important. Tomorrow, same time, capital gains will do. Okay? Purinjita Maple. Bye. Take care. See you tomorrow. Thank you so much. Love you all. Bye bye. See you tomorrow, guys. Bye.